What if every dollar you chase today cuts your brand's throat tomorrow? 71% of consumers will ditch you the instant they sniff short-term greed. Edelman Trust Barometer numbers aren't theory, they're a consumer death warrant. Brands from Pepsi to Airbnb learned the hard way that trust is currency. Short-term profit schemes implode when fans discover hollow promises. Data shows brand erosion compounds faster than any tactical campaign. Modern buyers demand authenticity before they click buy now. Tried selling snake oil with affiliate links? Google's watching. Your quick cash landing page screams low value and users bounce. Standing out takes time. Shortcuts breed resentment and distrust. Trust is earned drop by drop, not by one viral stunt. Founders, ask yourself, are you building an asset or a bubble? HBR confirms a 5% retention lift can boost profits up to 95%. Yet quick cash LTVs are often 3 times lower than CCs. This is not a drill. Your brand's soul is at stake. March 2024's core update murdered 100% of scaled content farms overnight. Domains relying on AI spam strategies vanished from page 1. This wasn't a penalty, it was digital capital execution. Sites pumping affiliate fluff lost every ounce of search traffic. Real businesses watched revenue drop by 80% in days. Alexa rankings imploded. Contrast that with genuine long-form thinkers. Semantic SEO heroes like Backlinko doubled their traffic instead. Google's algorithm now sniffs out zero-utility affiliate bait. If your pages lack original utility, prepare for de-indexing. Learn from Forbes' pivot away from clickbait in 2015. Survival tactic. Economist, creative destruction rings true again in search. SEO tribes obsessed with shortcuts are facing extinction. Compound interest favors quality content, not disposable cash grabs. Invest resources in expertise, not flashy funnels. Google just drew a line. The quick cash cheaters lost. Meta's 2024 algorithm slaps a 35% CPM hike on clickbait brands. Low-quality landing page penalty isn't rumor, it's real dollars lost. Your flashy hook now triggers higher ad costs by design. Data from Profitwell shows aggressive monetization spikes churn by 22%. Apple's ATT privacy crushes quick arbitrage margins by up to 50%. Without first-party data, ROI evaporates under tightened tracking. LinkedIn cut reach for engagement pods by 60% this year. Growth hack personal brands saw organic impressions tank. B2B sellers can't skip 17 touchpoints. Forrester's crystal clear prediction. Fast funnels that ignore trust fail 70% mid-market deals. Economic theory. Transaction cost economics warns of short-sighted tactics. Platforms reward sustained engagement, not bait-and-switch bait. Transparency becomes your cheapest growth tactic. Invest in clean user experiences, not flashy click traps. The lesson: platforms hold all the cards. Profitwell data warns of 22% higher churn with hard sell tactics. Customers drop out within 30 days when onboarding feels like a trap. McKinsey's retention magic. Every percentage point counts exponentially. HBR's blueprint shows 5% retention rises profits by up to 95%. Yet quick cash LTV sits 3x below your CAC, math you can't ignore. Forrester says modern buyers demand 17 touch points before they buy. Skip stages and watch deals collapse like dominoes. Case study: Slack's patient nurture sequence hit enterprise gold. They invested in value first, revenue came second. This mirrors Maslow's hierarchy. Security precedes purchase. Tactics that throttle trust inflate your CPA overnight. You can't outbid churn with ad spend. Growth at all costs yields nothing but cyclical loss. Build lifecycle loops, not one-off cash grabs. Remember, retention fuels valuation multiples, not flash-in-the-pan funnels. TikTok's de-influencing movement crossed 1.5 billion views by mid-2024. Creators are publicly shaming quick cash products on camera. Featured brands suffer sentiment crashes up to 40% instantly. Trustpilot reports 89% of shoppers sniff out scam vibes pre-purchase. False promise flags are killing digital reputations. 81% want transparency more than ever. Yet fake discounts and clickbait push followers away. Case: a skincare brand lost 30% Instagram following overnight. Their influencer push lacked clear disclosure. FTC slapped fines. FTC now fines up to $51.44 per endorsement violation. Ambiguous sponsorships risk civil penalties and public shame. Real influence demands candid calls, not sleazy side deals. Social proof without substance is just a ticking time bomb. Consumers hold the megaphone now. Mess with trust and watch your feed go dark. Gartner predicts 60% of Gen Z buy on brand integrity, not price. Brands chasing liquidation cycles tank shareholder returns. McKinsey found equity-focused firms deliver 2.5x TSR versus discount chains. SaaS heroes, boosting net revenue retention, fetch 4x valuation multiples. Quick logo chasers? They're trapped in short-term cash drains. Case study: Patagonia's purpose-first model trumps every seasonal sale. Their customer loyalty soar, TSR still beats fashion giants. Apple's privacy-first stance strengthens long-term consumer bonds. Platform trust compounds in your favor, not against you. Economic theory: network effects reward durable brands disproportionately. As acquisition costs rise, only brand equity scales profitably. Every discount code you hand out chips at intrinsic value. True competitive moats are built on customer belief. Future-proof your brand or cede ground to the de-influencers. The ultimate question: will you build legacy or chase flashing dollars?